The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9:06 a.m. Friday morning. We got about 24 minutes to go until the start of trading. Thanks for tuning in. Start your day with me. And right now, we got markets in negative territory. Some interesting action out there. We got some inflationary data. That's putting a little bit of a sell into gold and silver, a little bit of volatility in the note and bond market. In the market, a little bit of negative action from the all-time highs we had intraday yesterday. All things considered, folks, I say it all the time, context is important. You put the S&P on a daily chart, and man, oh man, we're sitting right near record all-time highs. We're right in the middle of a trend line that is basically trading to the upward side on a 90-degree tilt almost, 45-degree, we'll call it, 45-degree tilt to the upward right side. S&P's only back to where we're trading at. You're talking about earlier this week, folks, for a give back. Now, Amazon, we'll kick it off. Quite the numbers for Amazon. Why not? Now, Amazon, depending on how you're looking at this thing, right? I got a couple formations on here. Not really, just playing with some charts last night. Take those off. You definitely had a consolidation going on here from when you accelerate above 3,000 for the first time about a year ago. You get above 3,500. Now, you back things up. We put it on a daily. Now, if you recall, Andy Jassy only came in, I think it was the 6th. Okay, that was the day that he started as CEO. So you got a new CEO there. Trying to add some context to the move that Amazon has happening right now. Now, you're going to open at 33.50, okay? On this chart, you're going to open at 33.50. You know, just for some context, this month, folks, you were trading at 34.09. Okay, so yes, you accelerated dramatically higher. You went from 34.09 to 37.73. You just backed things up to where we were on June 7th. You're trading at 32.08. Okay, you're going to open again at about 33.40. You're talking about $140 above that share price. You're talking about a 4% increase from where you were trading in June. Okay, all things considered, it was a miss, though, and it was a miss in a big way, and I'm an Amazon bull, and I got some Amazon in my retirement accounts for sure, but it was a miss in a big way, and it was a miss on the revenue side. You know, earnings, they can take care of themselves when you cut costs sometimes, but you can't make up revenue any other way than just taking in cold, hard cash or credit. Getting into the numbers, they were expected to take in $115.2 billion, okay? They missed it by about $2 billion. On that front. Now, the revenue grew by 27% year over year. Quite a staggering growth number when you look at it. But the outlook was a miss as well. For the third quarter, Amazon said it expects to book sales between 106 to 112 billion. The market was potentially looking for upwards of almost 120 billion. And they might come in at 106. That's $14 billion over a 90-day period that they might not take in, that the market might have been expecting them to take in. Something you want to keep your eye on, folks. Now, the other side of that, though, is that, I mean, the second quarter of last year, Amazon was doing big business, right? That was when the shutdown was happening. And they just grew 27% year over year on that quarter going on there. Now, there's many articles out this morning, rightfully so, on Amazon when you get that type of a move. One article I was taking a look at here earlier, an opinion piece over at Amazon talking about growth is slow and should you be worried, et cetera, right? Now, they take in earnings-wise $15.12 a share. Market was looking for $12.28. So they beat on earnings. But, and this is a very big but, you got a stock trading at $3,600, folks. You got earnings per share of $15. The reason why it's trading at a multiple that's almost stratospheric is because of the growth. Okay, so if the growth wanes, then you're not going to be trading at $3,600 if you're only making $15 a share on a quarterly basis. Now, yeah, that's going to be about $60 maybe on the year, right, if you average that out. But you get into some of the numbers now. For the current quarter ending in September, this is the outlook, okay? Amazon projects revenue growth of 10 to 16%. Market was looking for 23%. That's a huge miss. Huge, very surprising. Did not expect that Amazon would wane this much in light of whatever trends are changing, but it looks like we were stocking up to a degree on Amazon that we're just not doing it anymore, and that's the cold, hard truth of it. Now, they have a lot more going on than just their revenue in terms of the growth when they break things down in terms of AWS, et cetera. AWS, here we go. I want to get into it. So AWS, company's cash cow, the cloud computing unit that rents computing power to corporations. Come on, give me the numbers. I had read them. Okay, now what this talks about here is that momentum is slowing relative to competition. Okay, now this is important, but how it breaks down in terms of their growth, that's your take on Amazon's services. The cloud services grew slower than the overall market and its peers last year. I mean, I wouldn't fault them too much for that because it's just kind of a race to the competitors catching up when you have that big of a lead. But it happened again in the June quarter. I mean, it's pretty staggering when you get punished because you're growing AWS revenue by 37% on a constant currency basis. Now you had Microsoft's Azure, though, growing at 50%, a much tinier number, though. Not even pulling up the numbers, we know it's a much tinier number. Alphabet's Google Cloud during the same period. The two competitors are gaining ground, as they say, and establishing themselves as credible alternatives. I would agree. You're still growing at 37% on a cash cow of the company there in a big way, though. But nonetheless, going to be an interesting open on Amazon because you have caught basically no bid in this stock since it traded to 33.25. Conference call began at about 5:30 last night. You trade down to that level. We're basically touching that level this morning right now at 33.40 and basically bumping up next to those pre-market session lows. Now, taking a look back to, as I put it, the 3-year weekly, I mean, 3,000's in play here. It has to be in play. That's the lower boundary line of this consolidation. If you're in here, you want to see 3,000 hold. Heard them talking about in the den yesterday. There's nothing in the way of 3,000 to 2,000. I do not expect 2,000 in play for Amazon, folks. I just don't expect it. The company is just a cash powerhouse. And yeah, the revenue is not quite what you expected, but we're still talking about $112 billion of revenue they took in, I believe. What's the number? Let's get it exactly. $113.08 billion in a 90-day period. Profit, and growing their AWS to the tune of about 37% in a big way. Amazon. We'll see, though. We'll see what's going to happen because that's quite a haircut and that is quite a reevaluation of maybe the growth they had when I just showed you. You're talking about maybe growing 10 to 16% in the current quarter. Market was looking for maybe 30% for that number and getting in. So I have those exact numbers as well, because that is important. And which one was that in? Well, I am a subscriber. Maybe I'm just not logged in yet. Yes, 10 to 16% growth they'll be looking for 106 to 112 billion in the current quarter, and the market was looking for 119. I mean, what if they missed their expectations? They gave themselves a $6 billion window, but the market was just looking for 120. It's a realistic nature that they come in at about $105 billion. That's a 15% miss on revenue. Those numbers are just staggering in a big way. So Amazon, we'll see what they do in about 15 minutes time from now as they open and we see where we trade for the first time. You're going to be right back in the middle of this consolidation, though, and where we go from there, we will find out. But we've been chopping around in there for a year. Seems like we might have to chop around in there a little bit longer as growth waning on Amazon shares. All right, folks, stay tuned. We got a lot to talk about. We got Pinterest out with their numbers as well. Pinterest, let's check it out. Traded lower last night and extending that down about $14, almost 20% on their numbers as well, missing on the daily active users. Stay tuned, folks. We'll be right back.
Golden ratios give shape to everything in our world. Represented in the Fibonacci sequence, these special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. I got a chart of Pinterest up here. Pinterest down about $14. The big one here. So they closed out the session yesterday at about $72. You take a look. I mean, this thing has quite a run. We put it on a 3-year weekly. The lows of COVID, you're talking about $10. You were up to $90 earlier this year. You're going to come in at $58. We're coming right into the lows we had in May. You're talking about a low there of just under $54, and we got a bid ask of $58.40 right now by $58.49. Now, Pinterest, the big deal there was they missed by about 30 million on their active user front. I think the market was looking for about 480 million, something like that. They come in at 450 million, percentage-wise, a big miss on the people using their platform, maybe showing a little bit of waning growth there on Pinterest, where they come out right in line with each other in terms of immediately after the close they come out. You saw Pinterest and Amazon, 2 pretty decent web presences. Of course, Amazon the biggest out there, but Pinterest catching a hold in terms of their internet presence, and both of them just showing that maybe there's some trends that are not going to stay, at least to the degree that the market was pricing in prior to this with Pinterest. I mean, that's quite a haircut, folks, 20% overnight on their numbers. They had a big move. They had about a 10% move priced in to their earnings. So you're talking about a $7 move potentially in either direction. If you're talking about buying a put or a call at the money yesterday, and you can even jump in, it's going to be about, you're talking about $3.50, because as you can see, folks, options, they don't open until the opening bell. So when you look at the implied volatility, the options expiring today, you were talking about basically a move of almost $7 in either direction. That's going to correlate to an at the money. And at the money as of close yesterday was about 72 of about $4. Well, if you were buying an at the money put, that $4 is now going to have intrinsic value of about $13 plus a little bit of premium on top for the day's expiration. So a pretty decent move. You buy both sides of it, though. And this is what's interesting, right? You buy both sides of this trade. You're looking for a move in either direction. And yeah, you made some money. You did, because you would have had to pay about $7 in premium to cover both sides of the move. But man, that creates a break even on the downside of $65. You're trading at 59. Yeah, that's a $6 profit right now. But you had to move 20% for that thing to happen. But the market, rightfully so, pricing in a lot of volatility on their numbers because of the volatility and the uncertainty coming in. And you see how sometimes that plays out. Already, though, you're talking about a little bit of a bid from 630. We're up about $2.50 off those lows to 59.10. We'll see where we settle in the opening bell in about 9 minutes. All right, jumping around, what else we have going on? So inflationary data, such an important data point as we look towards the Fed inflation fears and tapering possibly. That number comes in. CPE 3.5% year over year in June, the fastest gain since 1991. There's a lot of tantalizing headlines you can make about the data we're getting in terms of record breaking, et cetera, right? We have some really weird comps year over year we're still dealing with. We have some inflationary data that's undeniable in terms of the degree to which some certain areas of costs are inflating. And so, of course, it's going to be records across the board when we're dealing with unparalleled times in our country and our world's economic front in terms of what we're battling here. Now, the personal consumption expenditure price index, excluding fuel and energy, was expected to rise 3.6%. At a time when the U.S. economy has seen higher inflation, the gain was slightly ahead of the 3.4% May increase. Biggest move since July of 1991. The core PCE index rose 0.4% month over month, though, below the 0.6% estimate. You know, year over year is always important, but when we're dealing with such weird, and weird might not be the best word to surmise it, but, you know, we're just dealing with pretty weird comps on a year over year basis. Even on a month over month basis, weird things are contributing to the pricing factors of certain aspects of our economy right now. But month over month, you can't deny that's going to matter, right? And the market was pricing in a 0.6% jump in the core number. That number only jumped 0.4% month over month, indicating the inflationary pressures may be starting to ebb at least a bit. Can you imagine Chairman Powell with that news? I bet he perked up a little bit. I think he enjoys that. I mean, the last thing the Fed wants is just rampant, undeniable inflationary tendencies that will persist. That's the biggest fear right now for probably Chairman Powell, because, and I say fear, you know, it's not fear in the outright sense. It's fear because that's going to drive him to taper, and it might possibly cause him to have to taper at a time when we really haven't clawed back many of the jobs that we haven't even made up yet, and we're dealing with inflationary data. So we get a number. Market likes that number for sure. All right, now we jump back to the S&P. S&P pretty much takes it in stride. There's your 830 volatility. We pop from about 43.79. You move to 43.87. What I think is so interesting here, right, when you look at whether you're talking about the PCE data this morning, we got jobless claims and we got GDP data yesterday. Right? GDP data missed. We were talking about maybe an 8% number for second quarter GDP. It comes in with a 6 handle, 6 point something. GDP number yesterday, we missed by almost a full 2%, and the market just shook it off. And it's not that nothing matters right now, but it doesn't matter as much as everything is going to matter in a couple months. That's how my head is trying to wrap around this. You talked to Kevin Hinks. He's made some great programs. We talk to him Tuesday, Wednesdays, and Thursdays on the program at 9:15. So we don't talk to him on Fridays, but they still do their program, Fast Market, live every trading day at 11 a.m. Eastern time, folks. They're a sponsor, okay? I know I'm biased, but I would use this platform. When I talk to my friends, folks, when I text my friends, they're talking about options, and I was talking to them a little bit yesterday. Everyone's talking about, you know, the big tech earnings that are going on this week. Amazon out with their numbers last night. And I say to them that I would use this platform. It's an outstanding trading platform. And if you trade options at all, then there's no doubt about it that nobody beats it out there in a big way. But Kevin Hinks had been saying, you know, that it's going to take some time for these numbers to matter. And Chairman Powell has put that out. And so I think the market, you're seeing that unless there's some undeniable shift that might change Chairman Powell waiting for a couple months to see how these tendencies play out, that these data points are just buying time until those benefits expire in September. We have a lot of job openings out there. We have a record amount of people sitting on some type of economic assistance. You know, they drop off the state payment unemployment rolls. Then they're most of the time coming on to the federal level. Many states have done away with that now. It's a contributing factor. Somehow that gets political. That some think it's more of a contributing factor than others. Where the truth lies, we will find out in a few months, etc. But when you see the market shake off these types of things, we're seeing quite a little tight trading range. Now, yeah, you had some volatility yesterday. Out of the gate, you trade higher, then you give it back yesterday. Now we have some earnings driving things, a little bit of fear of the growth of things maybe subsiding, which sends the markets even lower. We're going to see how we open. I mean, the NASDAQ 100, you look at where we were yesterday, right? There's your 4 o'clock bar. We ended the session yesterday at 15,050 about. And by 4:45, you were pushing 14,900. You were down a full percent just in the 45 minutes following that, mostly to do with Amazon, mostly to do with Amazon trading down. I mean, almost like 6-7%, a remarkable number. When you look at per share, it's going to lose about $250. So much for the stock split that was possible coming into those Amazon earnings. Not so much when you miss on the revenue front to that degree, and they cut their share price by about $250. But something to keep in mind. We're seeing these data points. We have the non-farm payroll number coming up next Friday. Okay, that's going to be for the month of July. Be interesting to see how much weight the market gives that number. If it's a big miss, of course it may matter. If it comes in anywhere close to in line, I imagine that the market's just going to wait and see over the next couple months of how we persist, because we got a lot of jobs to make up. We have data that's still showing inflationary is hot. Inflationary data is hot, maybe just not as hot as the market had feared. And at that time, we jump over. We'll finish this segment up with the 10-year. We're talking about a 10-year right now, correlating to about 1.5%, trading up by 7 ticks to 134.14. Stay tuned, folks. We'll be right back for the opening bell.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and we got markets sitting in negative territory. S&P's lifting slightly on the open right now. We're still negative by about 25 points, trading at 43.87. NASDAQ 100 off by 151 points right now. We're trading at 14,088. The Dow negative by just 60, catching a little bit of a bid, 34,916. And the Russell negative by 9 points right now at 22.28. Crude's trading higher. Look at this. We might have a 74 handle in crude by the end of the program right now. We're trading at 73.76. Gold contract right now negative on some weak inflationary data. You got gold trading at 18.28. And let's jump over to Amazon. Amazon shares on the open down $255, make it $259, down 7.2%. The expected move on Amazon had been about $100 in either direction. So an at-the-money put or a call expiring today, that was going to cost you about $50 in either direction. If you're betting on the downside, that's a decent move, $250 to the downside, $253 to be exact. Let's jump around to some of the other stocks that had their numbers. Pinterest, with their numbers, catching a small bid on the open there, but still down 17%. Staggering numbers when you look at what we're down. We're talking about down $12 in a $72 stock overnight for Pinterest. All things considered, though, as I backed it up on Pinterest, you're talking about not even back to where we were trading at May 20th on this stock, but the next level you got to look to here. You're talking about Pinterest, the low of 53.94, definitely in play as you push to 59.93. We're actually below the lows that you had back there in March. That low didn't get below $60, and we are now back, which is remarkable. How many earnings seasons you can kind of just take back in an instant? We're back to 3 quarters ago, October of 20, when this stock accelerated. I mean, look at, let's back it up even a little bit further to get the full scope of where it went. You really come out of COVID, $10, right? You have an earnings event in May, nothing too spectacular. You back it up a year ago, that's when the fireworks really started on this equity. You were trading about $23. You come out with earnings and spike immediately within the span of a couple days to about $37. Folks, percentage-wise, that's about a 50% pop on this equity. They do it again the next quarter in October. You go from about $52 prior to their numbers. You actually spike up to a high the following day of $68.93 before closing at about $62. But again, the market persists higher. You make that high of $89.90 following their last earnings in February, 2 quarters ago. And just like that, we're back to $60. We are back now in the gap. And that was the point of this whole explanation. We're back now in the gap in Pinterest in October of last year. And you're talking about you fill that gap. I mean, you know, yeah, you could say you filled it here, which is true, okay? But anytime you get this type of a gap and you get it on earnings, you know, it's something you want to keep your eye on, because you start closing this gap out, you're talking about basically 53.87, right? You see the high area prior to that gap is correlating exactly to the lows that we're talking about. You're talking about $53.50. You make it back there, could be an area that you could catch some support. You might have to jump down to about the $46 level as well. But it was a pretty straight shot from an area of about $25 up to that area of $70, and they are waning on user growth. That is not what you want. No matter what you're doing, if you're a company like that, you need eyeballs on your website to be producing revenue. They missed by about 30 million daily active users, I believe it was, on Pinterest. I'll pull up those exact numbers as well, because we got so many stories out there. But you got price targets, right? Morgan Stanley cuts it to 77 from 83, citing user churn. You know, it could go on and on. Downgraded to neutral from overweight at JP Morgan. Yeah, to $68 from $95 at JP Morgan. Quite a haircut indeed. I'm trying to pull up and see if I can get those numbers. We'll pull them up after the break, and I'll take a look at them, because they're important numbers in a big way. Jumping over to oil, Chevron, Exxon, earnings top estimates amid recovery in oil and gas. They're both out with their numbers this morning. You got Chevron reinstating its share repurchase program, signaling confidence in its future earnings. You better, when oil trading at $73. Chevron earned $1.71 a share during the second quarter. Revenue, $37.6 billion. Market was only looking for $1.59 or $35.94 billion. Exxon also beat top and bottom line. We jump over to those two as the markets have opened this morning, and we got oil even trading higher on that. Now, that's a daily going back forever. Taking a look, let's just put it on a 15-minute. And there's your action. You were up to 105. You're up by about 0.8% for Chevron. Exxon Mobil actually giving back the gains, negative by about 0.6%. As this market catches a little bit of a bid, folks. We're trading at 43.90 right now, only negative by about 21 points in the S&P. NASDAQ catching a small bid as well. We're at 14,901. Let's jump over to Amazon. Continuing to drop. We almost had a 3,200 on Amazon handle on Amazon. We might be down $300 by the end of the day on Amazon. Remarkable action for this equity. And folks, if you're looking for an entry on Amazon, if you missed it, through all of this, not sure this is the spot, but you start getting to the lower boundary of this consolidation and you're a long-term player, I would be looking to adding to that. Not sure you're going to get there. You might not get that opportunity, but if you're okay with missing the opportunity and holding out for it, that's an area I like Amazon. And I'm not telling you anything brilliant, folks. It's just quite a consolidation. You've been in it for a year, probably got a little bit ahead of itself, obviously got a little bit ahead of itself with the numbers that they just came out with last night. Okay, that was not warranted, trading up to 37.73. I mean, do you remember when this was happening, folks? Jazzy took control. I talked about it in the front of the show. And the stock shoots up, what is that, $135, $155 almost on the first day he's there, let alone Friday's acceleration preceding that. Was that acceleration up to higher prices? And that, is all in the month leading up to their earnings event that disappointed greatly. So obviously not warranted to go above that consolidation area. But when you back things up, all right, that's a nice consolidation area. You're looking for a buy. 3,000 is an area that has found a bid on many occasions here. And you're talking about a company that is still growing. And you're talking about a company taking in $110+ billion on a 90-day basis. The fact that they have Jazzy, and listen, this is the bull case for Amazon. I have Amazon shares, okay? There's the case. We don't have them in my newsletter. Maybe we will if it gets down to that 3,000 level, because I like it. I do. But AWS, folks, you got the new CEO is the man who was almost in charge of creating AWS, and he ran it, right? But it was almost his literal idea. If you read articles about it saying, hey, we got all this stuff going on. We have all this computing power. Why don't we start selling it? And he just turned it into a cash cow, and he's now the one running that company. And that probably will define the future for this business when you go out, 10 years or longer. It's not going to be how many people are buying the new hottest product that's available from a third-party seller on Amazon. I don't think that's going to define it. It's going to be how they capitalize on basically, the back office of the internet with AWS and how they fend off Microsoft Azure. You get the Google Cloud in there as well. And how they make that happen, we'll see. But Amazon down 7.7%, quite a haircut indeed that you're getting. As the market finds a little bit of a bid, even with such a big player, down dramatically. Checking out, let's jump over to the Market Watch tab and see how we're doing here. Yeah, it's weird. I don't know what's going on with the Thinkorswim platform, folks. We'll have to, I'll have to send an email in. But these numbers are lagging by a day, it seems like. I got the NASDAQ 100 here. We know that Amazon's getting pummeled. Shows them only 0.8%. Not sure what's going on with these charts in here. That's unfortunate because I like pulling this up to get a nice feel of where the market's trading, but not really working out for some reason in that Thinkorswim platform right now. All right, folks, stay tuned. We got markets catching a bid right now. S&P is only negative by 20. We got, where are our commodities? Crude oil on its way to potentially $74. Gold giving back some of the gains it had this week. Still sitting at about 18.59. Stay tuned, folks. We'll be going over some of the other equities that are moving today. Take a look at what we have coming up next week for earnings as well. When we get back to the break. Stay tuned.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps negative by 18 points, catching a little bit of a bid, though, on that opening bell. You see the volume come in. Jumping back to the ES contract, you're talking about a 10-point jump right now. We're back to where we were almost basically to the close of action in terms of the acceleration you got after the market yesterday. All right, so we are back basically to where we finished at about 430 to 445 yesterday after you got Amazon earnings pummeling the market to lower prices. Especially, you take a look at the NASDAQ 100, right? You close out the session in terms of that 345 bar, closes out at about 1534. But as I just mentioned, you're back to basically where you were trading at about 445 in the afternoon yesterday. So the market kind of had priced that in. They priced in the earnings. We actually did trade lower in the overnight session. We've now clawed back the overnight session losses back to where we were at about 445. When you look at the NASDAQ, you look at the S&P, Dow, a little bit of a different story. Dow accelerating higher. That's quite a pop of about 100 points on the open, up to 34,973. And we jump over to the Russell, which is actually in the positive now. Got to love the divergence you get across all four of the main indices. You get the Russell trading up to 2243. Crude hanging tough near $74 right now, and gold hanging right at 1830. Not a bad week for gold. You put gold on the daily here, catch a little bit of a bid. You could see an ABC, even a small one, right? Maybe you got an A point starting about a month ago, June 29th. You got your B point potentially at about 1835. That's going to be, you're talking about a low there of 1750, an $85 A to B leg. If you're talking about the C point somewhere down here of about 1789, you're talking about 1875 potentially. Then we could. Yesterday's bar, we closed it out at 1832. That was above the close. In terms of July 15th, we had some nice volume come in on that bar, giving back $6 today, though, on that deflationary data coming out. Not even deflationary, just not growing as fast as we thought, potentially, on the PCE data out there this morning. Now, next Friday, we get the non-farm payroll number, maybe the most important number out there. The only reason I say maybe, ordinarily it would be, right? How many jobs is the economy creating? That's what we should be pricing the businesses that are part of that economy on. But when you got inflationary data that might persist, that might cause the Fed to pull back the stimulus that they're providing sooner than expected, that's where the market's focused right now. So I imagine as long as it's not a dramatic miss next Friday, maybe it's in line with what we're thinking. But even if it's a miss, the market has the power right now to basically excuse that and wait for a couple months, because the real expectation is that you lose some of those benefits that expire in September. People who have been getting those benefits, maybe fill some of the record job openings that we have across the country. And as I mentioned, we're going to find out whether that's the truth, because those benefits are going to go away. And if everybody doesn't come running back, as is the case, then that means that those who are out there arguing that the benefits have caused people not to fill those jobs, well, if that doesn't happen in a couple months, folks, then that was not the case, right? It's definitely a variable contributing, but what type of a contribution is it among the many other aspects going on? Now, we're going to have school opening back up. Okay, that's going to be a big factor at the same time. I can tell you, with young kids in the house, folks, my goodness, not a lot of free time when you got young children running around that might be in school to be going to work and doing work, etc. Filling those positions, and when you time, if you have two parents in the household, maybe you were both working, but maybe you decided, maybe one got laid off, maybe one just decided they were going to stay home with the kids during COVID right now, right? All of that stuff contributing in a big way. But I imagine we get the jobs number next Friday, and it's going to be, unless it's a big miss, there's going to be the excuses that can be made that will allow the market to wait for the next couple meetings, maybe from the Fed, to really where they get worried. I mean, you saw Chairman Powell this week. One of the things they focused on was his use of the term meetings, plural, that they're going to be looking for multiple data points before they do anything. And I would pay attention to that, because we got a couple data points to go before they are willing to accept the data to move on any type of taper of basically bond buying, mortgage-backed security buying to that degree, because that's what they do first before they do anything to do with raising rates, etc. All right, jumping around one of the stocks, jumping around to some of the casinos. All right, let's jump to Wynn. Now, Wynn, checking out next week. They got, yes, their numbers are out next week, August 3rd. What's that going to fall on? They're on Tuesday coming out with their numbers. We got a lot of companies out next week. But no real huge names coming, at least when I was first taking a peek. And I will, and I'm sure there's some out there in terms of companies that are reporting, but nothing like this week in any way. But Wynn's one of them that they'll be out with their numbers next week. Now you jump into the type of move you're looking at, folks, and this is what's cool, right? You want action through August 6th, options. Well, the market's going to price in, look at this jump as we speak. Market's going to price in about a $7.40 move because you have an earnings event coming up that week. Okay, you start going out further than that, you get a lot less implied volatility because there's a lot less uncertainty. You want action for the week further, it's only an extra $1 of implied volatility. Okay, you want action towards the end of month ones, you're talking about $10.32. Okay, but they'll be looking for $7.40. So take a look at Wynn. Quite a pullback these casinos have had. I mean, I think they have mask mandates going on in the casinos now as a result of the Nevada Gaming Commission, I think, getting into that I was seeing as well. And you pull up the 3-year weekly to get the full run of things, you were up to a high of 153 at the beginning of 2020 for some context of where we were prior to COVID. Now, Wynn's got big things going on over in Asia as well, so they're their own animal in terms of casinos out there. But Wynn trades from about 153 down to $35 the low some of these casinos, right? When you thought maybe the world was not going to gamble anymore. Not sure how that was making sense. I'm exaggerating a bit, but definitely got ahead of itself, getting back up to those highs at about 143. You are back to an area, $100, nice round number. This is the same area on Wynn where you caught a bid earlier this year as well. You look to February of this year, you dive down. Now, this is a weekly basis. You make it to a low of $99 on the dot before popping higher. You make it to 140 and you give it all back. We're back to $100. Now, yeah, this thing could chop down to 80. It definitely could. But it's starting to hit that area that you found a bid back in February, also correlated to an area right around an area of resistance back in the beginning of June of 2020. That area, resistance, turning into an area of support. You're back to that area of support. They'll have their numbers out on Tuesday of next week. All right. And don't call it a comeback just yet, but we got markets catching a bid, folks. You out there buying this dip? Because it looks like they're out there buying this dip. Surprise, surprise. S&Ps, I mean, you're talking about 17 points we just put up in the last 30, 40 minutes, 45 minutes. We've traded from 4380. We're approaching 4400. You get the Dow only off 112 points right now. Excuse me, NASDAQ 100 only off 112. You get the Dow getting into the positive, 34,978. And let's just take a look at some of the FANG stocks, see how they're trading. So Amazon Amazon's down about 7.2%. Market seems like that's the appropriate action. You made it to 33.06. Some of the other FANG stocks that had their numbers this week, Microsoft down about 0.6% on their numbers on Tuesday. Apple down about 0.4%. All the stocks hanging pretty tough in terms of where we were coming into their numbers. Google shares giving back some of the gains as well. Google had spiked higher. They were kind of the big winner in real remarkable action. When you think about the numbers that Google put up on Tuesday, you're actually now below that level. They crushed it, folks. They crushed it in a big way. You traded from, you traded up almost $100 on Google shares to $28.19. Even Wednesday, the day following their earnings, you were up as high as $27.86. And right now, we just got 2,600 handle for Google. Google in the long run, though, man, that's a strong company. They might have some antitrust concerns in the short run. But YouTube, search engines, you know it. Stay tuned, folks. We'll be right back to finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the S&P right now, negative by only 13 points. We've caught a bid for the entirety of the open right now. We're trading at 43.98. You get the NASDAQ 100 within about 100 points of being in positive territory, and we're right back to where we were actually at about 4:30 in the afternoon yesterday after Amazon sell off. The Dow basically flat right now, bumping up near 35,000. The Russell Look at that acceleration. We're right near the highs we had yesterday in the Russell. You're positive by more than 0.5% right now, trading at 22.50. Let's jump over to the VIX. As we see this market trade higher, you get the VIX back with a 17 handle right now, 17.87. Jumping around to other companies with earnings so far, you got Procter & Gamble out with their numbers charging higher. They beat. They're up 2.4% to 142.86 this morning. Now, Procter & Gamble, they beat on the top and bottom line, I think. Yes, they did. Revenue, almost $19 billion. Market was looking for 18.41. Earnings of $1.13 versus $1.08. Net income for the quarter, $2.9 billion. Not bad for a 90-day haul. Now, you get into it, though. They had talked about increasing commodity costs could hit its earnings in the upcoming year. You had Unilever noting that as well last week, but nonetheless, on the beat, the market likes it. You're up 2.6%. You take a look at Procter & Gamble, you're talking about bumping up near the highs we had last year, 146.92. This thing's been chopping around. I did have a channel line. Interesting. I haven't looked at this one in a while. Going back from the lows of COVID, you pulled out of there, but you've been chopping around in this area for the better part of almost a year. Made it down to 120, but we're pushing the all-time highs. I believe that is all-time highs on Procter & Gamble. Let me back it up. There you go. All-time highs within about a few bucks of that level this morning. All right, what else we got? We got Caterpillar with their numbers as well. Decent numbers, but they're trading lower to the tune of about 2.8%. We're trading at 206.39 so far this morning. Let's check around some of the other companies that had their earnings this week. Facebook catching a little bit of a bid. You're negative by 0.3%, but you catch a bid on the open. We were down to 351.05 overnight. See how they fare with their earnings front. A little bit of a disappointment, talking about where they may go in the future for decelerating growth of revenue was the big phrase on their earnings Wednesday night. And we'll wrap it up with Amazon. Why not? Catching a small bid, the smallest of bids, to be down 6.8%. But you're talking about almost $50 off the lows we had on the open. Amazon, don't expect them to retire today. It's a big way. Stay tuned, folks. We got Basil up next. Fast Market at 11. Live programming all day. We'll be right back, folks. Stay tuned.